So I had a guest post on my blog, and I just wanted to go through that right now. So it was reaching for your next tax bracket. You will never pay more in taxes than you earn, so don't be afraid to earn more. So this was posted by Kim. She should be making some new posts as well. And so the post is, Dear Intentional Money Life, my company has offered me a pay raise from $86,000 a year to $87,000 a year. I'm a single tax filer, and it looks like this will put me in another tax bracket. Am I going to lose money? How can I avoid paying that higher tax rate? And so then she kind of goes through and just explains that, no, that's not actually how that works. You're not going to actually lose any extra money. And so the first thing to understand is that your deductions are first. And so the tax brackets, if you're going to look at a tax bracket chart, you have to remember to take away your deductions, especially that standard deduction. That would be the main one that everyone should be using unless you have a higher standard deduction. And so, so she points that out first, and then she explains how the tax bracket chart works in terms of what are marginal rates and what does it mean. And so you pay 10% on that first taxable income, that first just under $10,000 for a single filer. And then you pay 12% on what's after that. So you're not paying 12% on everything just because you're on the 12% tax bracket. You're only paying 12% on the part that is above the 10% bracket. And so it kind of just goes through and explains it. And it says, you know, this is not how you do the math, and shows you how to actually do the math. And, yeah, so I think that this is really helpful. I think a lot of people don't understand the way that taxes work, and I think it seems boring and uninteresting and unimportant, but I think in the end it's actually really helpful to understand how taxes work. I was just talking to someone today about how they understood how taxes work, and they understood their tax situation, and they took their taxes to someone and they realized that that person didn't do some correct credits and deductions. Or there are a lot of ways that you definitely want to understand this, especially for tax brackets. I know I've heard people say, oh, well, we shouldn't pay you overtime because you're actually going to lose money in the end if we pay you overtime. That's not how it works. So you can kind of see exactly what happens. And so of the final money that you earn, that final amount will be taxed at the highest rate, your marginal rate. And so you can see that $1,000 raise should increase your taxes by $233, but then you still get that $768 left in this example with a 24% tax bracket. And then you can see my chart about the tax brackets and how they work. It kind of shows all of this lower part. That's all showing you the money that you get to keep. And then all of these are kind of the taxes as they go up. And so you're going to have that 10%. That 10% is going to stay there, but then as you make more money, so, you know, as you get up to, say you're up to $95, you can kind of see, okay, here's the 10%, and here's the there's some 12%, and here's the 22%. You can kind of see that as your income goes up, you start to add more taxes. So you're paying more at $295,000. You're paying more, a higher percent of your money to taxes than you would be at, you know, $35,000, but you still are always going to be taking home more money no matter how you look at it. And it shows the tax chart that I've created, and it explains how to use it. So yeah, if you are wondering about taxes, or if you're in a disagreement with someone about how taxes work and how marginal tax brackets work, you should check out Kim's blog post on my blog. It is intentionalmoneylife.com/yournexttax